Good evening, it's Mark, and I found some very interesting things tonight when I went through my scans. I went through a variety of scans, long bias and short bias, and I found some things that kind of make sense and put everything in a big picture here that makes a lot of sense for some of the stocks that have been running and some of the stocks that are pulling back. So the main thing I found was that the shippers, the transportation sector and the shippers have been doing really well, specifically the shippers. So I focused on those because of GLBS. So GLBS, the one that I've been talking about for like a week or so now, it's breaking out again. So that brought me to just run a industry scan for the shippers. So I found some interesting things there with the relative strength on shippers. So I ran a stock fetcher scan and I sorted by RSI, and I found some really good things that are breaking out and like near breakout. I have some favorites where I've analyzed the fundamentals like years ago. So I looked at the fundamentals of pretty much every high volume shipping company, and I really liked the growth in SBLK and GOGL. So the SBLK is a Safe Bulk Shippers, I believe is the actual name, Safe Bulk, and this one's it doesn't have as much relative strength as the other ones, but there could be a base forming there, and that's like some of the other ones I found too that don't have as high RSI. So we've got a potential channel break there. Well, actually, yeah, it just broke out. So we had this long trading range and a total base there. Made it based out perfectly, like bottomed out, and then just uptrended and broke out of these resistance levels here that it found 3 times. Like it found it there, there, and there. So we broke above that, and pretty good flurry of volume there. So we got uptrend. I'll just draw some channels there, and it traded pretty well in these channels in the trading range, but we got a breakout there. So this one looks good on a continuation on breakout, and the other ones, GOGL, these are the ones that I just like the fundamentals on when I looked at them like a year or two ago. Like I looked at their revenue growth and earnings growth over the years and projected. So GOGL not quite as strong, but it's testing the upper part of this trading range here. So I'll watch this one for a breakout. It needs a little more volume than it's had, and then it's a good breakout watch too. It's got an uptrending channel going. So there's the other line for that. I'm going to call this one a failed signal. So it reclaimed after this. So that's the channel right there. So it's right in the middle of it. And the other one, the better charts were OP. Because I found this one too. I ran my 8% gainer scan, stocks that moved 8% in a day, and this one was a really good one on Friday. It's a lot of high unusual volume. See, it had high unusual volume back in July, but it didn't follow through. But the volume was about twice as much on Friday as it was in July. So this one I'm guessing is just some kind of a low floater or a squeeze or something, because it doesn't have, the price history is pretty messy. But I didn't look at the fundamentals on this, so I don't know what, there may have been some kind of news on about the pop, but it's just a technical setup at this point for me if it does break out. And I had TNK on my watch list from years ago or a year ago. This one used to do well, but looks like the relative strength isn't quite there like it used to be. Like here it was in 2022, it was a real winner. I mean, it like tripled. So I had to take that one off the watch list. I usually try to keep some sectors, I keep a watch list of different sectors. So right now I've got shippers and some oil, but usually mostly short bias. So they had a DHT. That's another good shipper. You can see it does have a history of moving higher. It does go up and runs, and it broke this downtrend channel there, and it had a nice uptrend. Then it broke below, and now it's in another uptrend. And the interesting thing I saw was it broke above this big level there, and that was sort of the flag it did there. So this one's off to the races in a multi-month breakout. So this one's another good one. I never looked at this one fundamentally, or at least it never caught my interest fundamentally when I looked through all these, but the chart's looking really good. They may have boosted guidance or something. So that one's probably actually this is my favorite one technically, my favorite shipper technically, because it's had these good run days all month. Like it had a lot of nice percentage moves. So with these levels taken out, it's a good it's a breakout setup off that flag. So that's the shippers. And I found in my scans, I found some I ran the gap down scan, and I ran the supernova scan. Unfortunately, the supernova scan didn't really find anything interesting. Like the best supernova was like VARC, and this one went from like 4 to 8 this month, which is kind of interesting. Like I didn't look at the fundamentals on this one, but I'm not sure. This one could be a really good one if it's a pretty bad company, or if they don't have any good fundies like earnings or anything. I'm just kind of looking that up right now. Yeah, we got a really low market cap. Consumer cyclical. Furniture. That's weird. I don't know why this one will be up so much. They make furniture. They make chairs, stools, armchairs, steel frame, floor rockers, seating, desks, office furniture. Yeah, so basically their only segment looks to be furniture. Yeah. So it's got 800 employees. So looks pretty legitimate. Looks like revenue is going to grow slightly going forward. It looks like their earnings guidance has been pretty good. They boosted their earnings guidance. So it's really not the best supernova setup because they're doing well. Like the best supernova shorts are obviously, garbage companies or like Shell Corps or something that's up 100%. Because it's only up 100%. I mean, even though it's a lot, like for a small cap, it's not a ton. So I'm trying to find what the news is. Why are they up so much? Oh yeah, they beat guidance, or they beat earnings. It must be a squeeze. They beat earnings by 48%. So yeah, as I was thinking, this one is not really a good short setup. I mean, it's gonna exhaust itself, and there'll definitely be something to catch on the short side when it exhausts, but it's not like a short that you can hold for weeks or months, obviously. So it's not really. Those are kind of the ones I like to focus on with these supernovas. So, but that's interesting though, because the market kind of bounced a little bit. So you'd think there'd be more things running big time, but so the two oil ones I found some short stuff just now. Well, the FEMI, the FEMY, that one's still going, and I'm not sure if that print is correct, but that one's getting shorted. So that's actually probably the best supernova short watch. And I found EURN. So it's a gap down scan, and it's a pretty interesting chart because we've got this really long trading range it was in and really clear levels, and then it just dumped on Friday on volume. So this is one of my short watches now, and it's an oil and gas. I think it's oil and gas storage. So I'm just looking at the news. Yeah, I don't really see anything at a glance here, but just the fact that it hit that scan is pretty telling. So I think this one's gonna actually come down and test the 15. Like the strikes were kind of all over the place. Like I think it had 15 strike or 14 strike, but this one has puts. It has 15 strike. It's got good volume on the 15 strike October 20th. And that's a good ways down, but the day range is picked up a lot. So there may be one more flush out day that can get us to 15 in a month. But I'd say if it hadn't flushed out a lot today, it'd probably take more months to get to 15 as a setup. But these 15 puts look pretty good. October, and it's got 15 and 1250 strike November puts too. Other one was 9 NINE. It's another oil and gas. Kind of the same kind of gap down. Really crashed on Friday. So this one's basically a range too, trading range, and just really hasn't done anything for months. So this one's a good short watch too, because it had a really good gap down and a really high ranging day on Friday, really dumped. And this one's got options too, if I'm not mistaken. I'm just double checking that. Oh yeah, we got they're not super liquid, but it's got 4-hour strikes, October 20th, and 4-hour strike. The 4-hour strikes are kind of liquid on the November. Well, it's hard to tell because I don't see much volume, but these $4 October 20th strikes are interesting because I think it's going to get there. I mean, it's just been downtrending, and then plus that gap down, and you've got oil. Oil's just corrected too, so that's a good short setup. Some of the other ones I found were actually kind of older stocks that I had on watch lists for a while, like this NA. This has really good fundamentals and really good growth, and I really like the fundamentals on this stock when I looked at it, and they're really good. Like, I really thought it was going to have a really good year, but it just found some support there at this level here. At about $1, it found support, and it's really trying to bounce there. So I kind of like this as a sort of a longer term idea, like a longer term investment, because it's a good setup here. The technical is starting to come in a little bit, and it's just down so much too. And the other one was the Talk, and this one I had on watch list for a long time, and I lost track of it, but I believe this one has the calls too. Yeah, actually I still do have the calls. I have the 250 calls. I have the 250 strike October 20th calls, which I was looking at my options chain. I just realized I had that. So I've got the 250, and it's got liquid Novembers too. But this one, the relative strength on this one's been really good. Like, I started looking at it back a couple months ago at least, and it just had a really nice flag there, and it looks like, based on how light the volume is here, like the sell volume is pretty light, that this could be a flag too. So it's definitely still uptrending, which is good given the market, and the relative strength is really good. So this one I really like the fundamentals on, and the industry is good. It's in the virtual behavioral healthcare. It's psychotherapy and psychiatric services through its platform, business to business, text, audio based psychotherapy from licensed therapists. Offers talk space for business for employees. So it's got really good, really it's low overhead, and the growth was forecasted higher. They've got pretty good growth. Like, the net loss is shrinking at a good pace. Yeah, and the revenue growth has been pretty good over the past few years. It's really, like, almost quadrupled since 2019. The revenue's quadrupled pretty much. But their earnings have gotten better too. And the balance sheet's really strong. It got very little debt, and I don't think they even have any long-term debt. Because I was saying it's not super capital intensive, So it's a good balance sheet, and it's a small cap. But the earnings growth has been really good. Like I think they'll be profitable next year, based on the trajectory. Maybe even fourth quarter. But I think looking at this, there's probably a good chance to be profitable in first, second quarter if the margins keep improving. So that's a good one, technically and fundamentally, I like. And I forgot that was one of the few ones that I had solid calls. I got the yellow calls too. I got yellow calls and lab. Let's see what lab is doing. That's a pretty good one too. Yeah, lab's hanging in there. Well, yeah, it's kind of struggling here at these levels, but not bad for considering what the market's done the past couple months. And the oil stocks are interesting. So those ones that for the short watches are pretty good because there's a good chance oil just keeps correcting. So I think there'll be some follow through on the short side. And I think there was another one or two companies that the fundamentals were good that I haven't looked at in a while. I'm just going through my watch list on that one, on those. Let's see. Yeah, surprisingly, the S-Gem is pretty good. The short Jim Cramer. This is the inverse Cramer fund. So it basically trades the inverse of whatever Cramer does, which is, as we know, statistically, that's been pretty good over time. You know, if you bet against Jim Cramer's picks, it's a pretty good return. So this one has been really like a big underperformer, especially considering the potential there with the inverse Cramer picks. But it bottomed out actually around August. So to me, what was interesting was the relative strength versus the market, because basically the market started going down about the time it started going up. So this one's interesting because I'm always looking for things that are uncorrelated to equity markets. So this is an interesting one to have this in a basket portfolio. I mean, it's really high risk though, because I don't know exactly how they're tracking the inverse of his picks, but there's a lot of potential there. You know, obviously going against Jim Cramer, and just the fact that it's had some relative strength finally. You know, and I really thought it looked pretty bad. Like I didn't think it was gonna work out, but it still needs more volume. But it's not a bad thing to have, I think, in a portfolio. Yeah, the other one was this hotels, SOHO. SOHO was one of my deep value picks that I did a good analysis on for my Substack, and it's just been in a range like a lot of other things, and it keeps finding support at these levels. So the last time it found support was at about 160, 165. So we're at 168 right now, and it's kind of been hovering at 163, 165, 66. So it's really right on my support line. So I think this one's a good shot here, long, just because it's at a discount to its assets, as a deep value play, and it's basically like a REIT, but they own Hilton hotels, so it's sort of a play on just the hotel business. So the fact that they have branded hotels is a good thing. I think it's really discounted the stock too much. I mean, given it is a REIT, and then the REITs have gotten a bad rap, obviously, the past year, but it's not like it's an office REIT or anything. That's what I talked about in my write-up on my Substack. Is I don't think it deserves this cheap evaluation. In the past, the reason I've originally had this on my radar was years ago. They paid a high dividend yield. They paid out dividends really consistently and well. It was very shareholder friendly. The dividend yield was always, I think it was 5 to 10% when I first bought it years ago, and then I sold it after COVID, because they were really disrupted, obviously from COVID, but there's still value there, and it's just a good value play, and it's actually got that technical level. I mean, to be safe, it would, if it breaks above 175. Let's see what this channel takes us, or this. Yeah, 175 to 180. If it pops, is a good entry, but there's still an entry here for a long-term value play. It's kind of like the SLGC. I actually found this one lower than I thought I did. I think when I originally did the write-up, it was like 210, 215 a share. So it's actually been a good return since my write-up, and it just keeps finding a lot of support around $2. And some of the other ones I found, yeah, it's funny, I was talking about the hotels, but this one's another hotel, and I'm just going to pull up these fundamentals, because these are really good. Yeah, this one's a LUXH Urban, is a long-term lease. They manage a portfolio of short-term rental properties in major cities. Their growth focuses on seeking to create a win-win opportunity for owners of dislocated hotels, including those impacted by COVID, while providing favorable operating margins. The company operates these properties in a cost-effective manner by leveraging a technology to identify, acquire, manage, market them globally to businesses and vacation travelers through dozens of third-party sales. Through the company's portal, guests at the hotels are provided high-quality service, and it's I don't know that brand. It looks like it's in Miami. Maybe that's a regional thing. Maybe it's regional, but this one I never had it on my radar before, and it hit one of my scans, I think it was the 8% gainer scan, and you can see the technicals are amazing right now. It's just breaking out. It broke off this high flag, did a high flag, and it's breaking out again. and it's been really strong while the market's been weak. And one of the things that I always talk about, relative strength, because if you're gonna buy a company, it's nice when it's got strength, even if the market's weak. Because so many stocks, they fall into they usually end up trading with the market. So it's nice when you see things that can run without the market. But I was looking at the long-term chart, and it's just really impressive. It's just been up. It's been up all year consistently. Like it was at about $1.50 at the beginning of the year, $1.60, and it's all the way up to $4.60 now. So that's a really good percentage return for a company this year with the market sell-off we've got here. Like, it wasn't as long trading range, but this momentum is really good. And then that made me look at the fundamentals here. Just like a first glance, fundamentals on the earnings trends. We've got 60 days ago, the September quarter was forecast at 7 cents a share, and that got bumped up to 16 cents a share just not that long ago. And then the next year's earnings are forecasted to double, and the revenue is forecast to grow a big percentage too. It's actually worth calculating because it's pretty interesting there. The revenue is going to grow from 227, or going to grow from 125 to 227. So it's a 81% revenue growth. So 81% revenue growth is really good, and the stock's actually been moving like its revenue growth. So yeah, 80% revenue growth plus earnings boost. So now I'm looking at the balance sheet a little bit, and some of the some of the financials. So you can see the earnings have been crushing it. In Q2 2003, earnings were forecast at 4 cents a share, and they were 21 cents actual. And the revenue growth is pretty insane. It went from 5 million in revenue in 2019 up to 43 million in 2022. So it's really outstanding revenue growth, and so it must have some really good management. I mean, these numbers are really good. Like this revenue growth. I mean, that's practically 100% growth 1 year. That's the kind of stuff that usually demands a really high PE multiple and valuation multiple. So I mean, this is just Yahoo Finance, so it's probably about 90% that it's going to be accurate, but that's pretty good for a first glance. So price to sales, only 2 times sales. It seems really cheap, even relative. So the comparative valuation's going to be a little trickier with the size being smaller than the other hotels. So because the revenue growth is obviously more with small companies. So what you could do is, if this were a bigger company, I would do what they call a comparative valuation, where you obviously compare it to other companies in the sector and the industry, and if just based on simple metrics, you could do price to sales or price to free cash flow or whatever you want to use, but that's how the big funds do it. They usually do a comparative evaluation. So this one's interesting. I just want to see if it has options, because that would be pretty cool if it did. But I think it's worth a long-term hold. Let's see. I'm just looking for the options real quick. I don't see a chain coming up. It's not enough volume. Yeah, this is an interesting company. Like I didn't know about it till today. Let's look at the balance sheet, because the income statement's really good. It's not so good. What happened there? They took on some long-term debt as like a lease. Doesn't seem necessarily bad, because their business is leasing, or owning properties. So, like I was saying, this is Yahoo Finance too. So I like to use it as a first glance, just to see if anything sticks out, and then I do more investigating, like with the actual SEC filings, or confirm with other sites. But I took on some debt there this last year. Well, let's see. Looks like they actually worked it off, or they yeah, something. Yeah, I think that was just Yahoo, because this looks like a better run rate for the debt. Yeah, I don't see any problems with this or anything unusual. Like long-term debt is down a little bit this quarter, but I'm just trying to see if it's a deep value. 167 market cap, and we got nah, it's not really a deep value at this point, but I mean, it really shouldn't be with that kind of growth anyway, but it's kind of close. So this one's really interesting. It's got a lot of institutional holders, and Core Advisors is a top institutional holder with 0.4%. And it gets some interesting names: Vanguard, BlackRock, Renaissance, Citadel, UBS. Yeah, it's interesting how many, with this, the fact that the company is so small that it has so many institutional holders. I guess they're obviously the ones probably bidding it up so much too. But I don't always see so many institutional holders with these small caps. I mean, it's really almost like, I mean, I would almost call it like a micro cap. It's like 167, given how big these mega caps are nowadays. Like, we're talking $1 trillion valuations on, big tech and stuff. So pretty pretty interesting to see these institutions. Tower. Mutual fund holders. Yeah, this Ancora microcap. That one's interesting because Ancora, yeah, it's the biggest holder. If it's a value fund, then that would be, then I'm on the right page as the big players. This Ancora is interesting. I might do some more research into that because I'm sure Ancora might be, they're probably crushing it if they've been holding this thing. So, because Ancora might be, I mean, it's a mutual fund, so you can buy it too. I've never heard of that one. Ancora microcap. And the second one's MSS. I don't know what that is either. I don't know what that is. Yeah, I guess it is actually a microcap, technically. I don't know. I kind of call micro and small the same thing. I mean, they're small. Yeah, it's a very interesting stock. LUXH. It's breaking out. So what I'm looking to do tomorrow is I might take some profits on these AU puts because unless it gaps up a ton, I'm gonna have pretty good P&L on that one. I don't know, it's so tempting. Like, gold's so weak that I kind of want to see if we can get down to the bottom of that channel support like I was talking about, like down to this level. So it's going to peg it a lot lower. I mean, gold had a really wide-ranging day. I mean, these aren't futures, but it's basically the same thing. So I mean, there's a lot of downside because it lost all the momentum it had from last year and it's trying to go sideways, but it can't even go sideways. It's just breaking down. So a lot of times these commodities can move pretty rapidly. So I'll probably see what happens. If I get a really good gap down, I'll probably lock in some profits. And TLT is a nice channel too. So TLT came close to my channel support because I did this channel up, and it came really close to that, and then bounced a little bit, but still kind of in the middle. But it's trying to move up, but we're still in a downtrend channel for TLT, and that makes me think of these high yield stocks I found. I put out some of my favorite high yield ETFs and stocks on my Twitter account. Like I did a lot of research last year on high yield funds, high yield ETFs, and I was looking for the best ones with a long track record and with a track record of good share performance too, not just because a lot of these high yield ETFs, the yield is great, like especially as like a covered call or something ETF, and then the returns are bad, so you lose on principal. So I kind of ideally obviously would like some return on principal plus the share price plus the dividend yield, because there's a lot of ETFs nowadays that pay dividends monthly, and it's just really a kind of superior trading vehicle or investing vehicle next to laddered bonds for yield. So I'd say laddered bonds are probably one of the better strategies, obviously for high high dividend income yield. But a lot of these ETFs are good too, and I didn't even put all the ones that I have or track. Like, I just did a couple of quick tweets blasted out, but there were some good ones. A couple of them were new to me, and they're all over 8% yield. Like the oil one's like 18% yield. I think it was like 20 something when I first found it, and of course the share price hung in there with oil. So it's probably one of my better picks, the past year. But I put that one on Twitter like a while back before oil had a run. But it's a good one just to include. But oh yeah, this other one was I actually found this one. It's more speculative. I mean, it's just really speculative because it's really a penny stock, but the technicals you can see in the past. In 2022, it had some really good run there. Went from like 20 cents to 80 cents in 2022, and a lot of times I'd see it in scans and stuff, but it's always found support around 15 cents. So at 15 cents, give or take, it's always found support. So even back to 2021, it tested 15.6 was a low, 15 cents was the low, and then it just found support consistently at like 15 cents, and it just recently found support at 15 cents again in the beginning of the month. And the thing I noticed this little triangle there. It's got a little triangle there. So it looks like a flat bull flag triangle because it popped out right there, and then it broke off of this downtrend channel. So there's the downtrend, because it was downtrending, and a downtrend channel, and then it popped out, and then it's flagged, and that looks to be looks like the start of another push. So the fact that it bottomed out at 15 plus this flag, it looks bullish, and it's not my favorite setup. It's obviously pretty speculative. It's a speculative stock to me, but it's I'm just gonna double check, but I think it was just like a driller or something. Yeah, really small market cap. Oh no, it's actually it's not oil. It's renewable energy focused on acquiring, developing, and monetizing a portfolio of proprietary tech and the waste to energy and regenerative products. It's in Canada, like Ontario. It's headquartered in Toronto. So it's not really an energy company, it's like a waste company, which is interesting because those are pretty boring businesses and they're pretty good businesses. Like sometimes the most boring businesses are really good, obviously. So waste disposal or waste companies are usually pretty consistently good performers, overall. But I just want to peek at this one because it's so speculative. To me, it's speculative given that it's on the it's an OTC. It's not on a major exchange, so it's like an OTC stock. But and the fact that it went so much in the past, it could have been pumped in the past. I don't know, but that's what I usually suspect when I see see a stock that it's on the OTC that triples. So they got fertilizer on the web page. Bioorganic fertilizer. I don't know. I mean, I don't know enough about it to say whether it's a good company, but it's just a speculative, it's a technical setup. So we'll see what it does, but super speculative, obviously, if I haven't stressed that enough, but it's a technical setup. Yeah, it looks like I see biofertilizer looks like their main product. It's bioorganic fertilizer. Yeah, I don't know. I mean, but it's interesting chart for sure. And the K-Web, I'm watching this one tomorrow too. I'm watching this one closely because it trades really well when it moves out of these channels. So it really tried to break out of this channel here, so upside, but I'm gonna see what happens because it just kind of looks like it's gonna fail. So if it fails and reclaims this rough channel, like if it goes below 27, I think it's for sure a short or a long put setup, because that would be like a failed signal. And it did that back here, like back here in August 10th. It tried to break out of that channel and then failed. So like failed signals are sometimes the best trading setups, and that would be a pretty good failed signal. But I could be wrong. It could actually break out, but whichever way it decides to go, I'll most likely be entering a position on Monday or Tuesday, depending on what happens. If it just goes kind of sideways, I'm not going to trade it, but I'm looking for either a breakout or a reclaim of that downtrend. So I think that's about it that I wanted to cover. And it's a pretty big test on the IWM right here tomorrow. Like it came up to that channel resistance, and I've been all over these technicals. Like these technicals have been playing out pretty well, like these channels and levels. So my hunch is they're going to try to reclaim that support level and maybe a gap up, but big level, like important levels, as I've been saying for a while, like these, if it keeps downtrending, there's potential for some serious sell-offs if you get close to this level there. So I think I'll wrap it up because we're almost at an hour now. And let me just go through and make sure I got all the stuff I want to talk about. Yeah, Lazar. This one's came up to an interesting spot here. It came up to this downtrend level that I found. So I'm short biased on it. Like I've got puts, but so it's a good entry actually for a short if it breaks below 442, because that would be that would show that this is gonna hold. But I got the puts on this one still. I've got this week's $4 strike, so it's better short setup than long, but it really well could break out of that as low as that's been popping. But that's about it. That's all I want to talk about. So as always, I'll put out anything else I see on Monday or anything that catches my eye. And hope you have a great week, and I'll talk to you later.